Hello, everyone, and welcome to CID's webinar called Finding Your Competitive Edge and Becoming a Master of Workers' Comp. My name is Zane Agostini. I'm CEO of CID Insurance Programs, and I want to get you started, but I first of all want to introduce Darby Fisher, who's our work comp underwriter, who will be teaching our webinar today. So I'm going to go through the logistics with you. You're going to be defaulted to mute, which you probably already know, and you're able to hear but not speak. But your voice is important to us, so please pose those questions in the chat room at any time, so we can answer them throughout. We'll stop and answer them as we go through the PowerPoint. There'll be a short survey with a pop-up after the webinar, and again, your feedback is very important to us, so we'd appreciate you filling that out and letting us know how we did. So what are you going to be learning today? So we're going to look at workers' comp trigger points that will get the attention of a business owner. What are the best classes to target? And how to win the workers' comp business. And then trends on declination business will also be discussed. So without further ado, I'm going to turn this over to Darby.
Good morning, everyone. So when we begin, we are going to get into the worthwhile premium accounts, which you don't just win on pricing. Throughout the webinar, I'm going to provide you with the knowledge on how to prompt the interest of a business owner to successfully gather enough information to propose a competitive workers' comp policy. As an underwriter, efficiently analyzing and understanding your risk is imperative to proposing a competitive workers' comp quote for your insured. You need to be able to pique the business owner's interest by coming to the table with more than just price. Upon your review of the listed items, their current policy, classifications of employees, and their loss history, you should be able to know if you have a competitive market for this risk or not. The first thing being their current policy. I urge brokers to obtain a copy of that, as it gives you a competitive edge by being able to determine where the premium and rates need to come in when quoting. The insured's deck page reveals how their policy is structured as well. Otherwise, you're kind of working in the dark. So if obtaining the current policy is difficult, getting that target premium or the class codes on the current policy is still a big help in knowing which markets to go to. That way, you're able to get under the current premium and determine if the policy is structured correctly. That way, you'll be able to research the class codes and ensure these best fit the business operations. Physical loss runs are another big indicator as to whether you'll have a competitive quote for the insured. These are going to be mandatory with the submission because you can't obtain a quote without them. With poor loss history, it's likely going to indicate the insured's experience mod rating may be high, resulting in a debit on the policy. Therefore, it's even more important to know which markets will apply additional credits or have competitive rates when quoting. Some carriers look for claim severity. Others are making a decision based on the frequency of claims occurring. So even if the insured does have poor claims history, you can guide them in the right direction on how to turn it around. Success goes beyond just price. A business owner is more likely to write the business with you if they feel you understand the risk thoroughly and are working in benefit of the insured in more ways than just pricing. I do see we have a question. Do you have a cheat sheet to have a quick quote price based on the SIC? So there isn't a cheat sheet that can give you an indication of pricing, unfortunately. With so many variables to take into consideration, like loss runs, payroll, classification rates, it is difficult to give a price without putting it through the carrier system. But knowing what classes of business to target, what markets are doing well with those, can help. The more you do it, the more you'll be able to understand where the pricing range might be. We'll get into that a little bit later, though. So how to differentiate yourself from the competition. Your job is looking to save the business owner in more ways than just price. The list you're reviewing are some of the key work comp trigger points that will get the attention of the business owners. As I previously mentioned, if you're able to get a copy of the insured's current policy, you can see the structure and the classifications used. Potential misclassification of employees can lead to problems at the time of the audit. If an employee is classified incorrectly and in a lower rated class, the insured will end up owing premium to the carrier at the time of the audit. But on the other end, employees may be classified in a code that is rated higher when they can be moved to a lower rated one, inevitably saving the insured premium. So if I'm ever unsure of the correct classification, I always double check with the WCIRB for California risks or the NCCI for risks outside of California. When obtaining information on the employee's classification, it's always best to gather a list of their duties as well so you can confirm this with the carrier. For property management risks, a lot of the times they have employees doing handyman work. I'll always go back and ask for a list of exactly what they're doing because sometimes they may put tree trimming, which isn't in our carrier's market. So it's best to confirm everything they're performing is something your carrier can cover. If your insured has exposures that are rated high, you can take the risk to markets where you know to apply additional credits based on their years in business, potentially the territory they're located in, schedule credits for clean claims history, etc. I want to stress the importance of knowing your markets well because having this knowledge will give you an edge over another broker. You can always expect any contracting, manufacturing, or residential janitorial exposures to be higher rated than other classes. So you can balance that out by taking it to market to apply additional credits to help secure a bind. I do want to just briefly touch on where premium credits cannot be applied, and those are for whose premium is under the minimum threshold. Some markets that's around $7,500 and others are $2,500. It just kind of depends. So again, taking the risk to markets where the class code rate is competitive will offset that. With risks that are assigned a higher mod or have poor claims history, as I mentioned previously, you can provide carrier resources and information on how to mitigate claims in the future and inevitably helping to bring their mod down. That's going to be your competitive edge for those larger sized businesses. So I do see a question. What do you mean by applying credits? How would we do that? So it's not you that's applying the credits, it is the carrier, but based on the structure of the policy or a clean claims history, or maybe the business is located in Northern California, there's all of these factors that go into carriers making a decision on if additional credits can be applied to the policy or not. So we're going to move to the next slide. It is key strategies for securing the bind order. So once you've obtained a competitive quote from your markets, how do you win the work comp business? What you'll do is you need a strong close in order to secure the bind. So making a formal presentation that shows not only the pricing, but and that premium is competitive, but there's aggressively priced rates. The insured's experience mod may be resulting in a credit on the policy, or the insured has a clean claims history. By being able to speak knowledgeably about classifications and rates applied or carrier services, this will help you in securing the bind. The message to get across is two things. One, you help to show the insured what is wrong with their current policy, and two, the broker they are currently working with may not be analyzing the business correctly, ultimately costing them more money. If you do those two things, it will open the eyes of the insured, and they may begin to question like, oh, maybe I do need to move my business because it does seem like, I am being offered and shown a lot of knowledge about what's going on with my policy. So I want to briefly go over just some classes of business to target that I'm seeing do very well currently. These have the most success in competitive rates and premium. So I just want to go over a few. First thing, restaurants, more palatable, easy to quote restaurant exposures would be those deli shops or small payroll fast food chains, which will be really easy to quote. The rates typically stay the same, whereas a larger tavern or a bar is going to require further underwriting review. Still competitive, but there is going to be more in that submission. Contracting markets have been really competitive rate-wise, electrical and plumbing specifically, but really any artisan contractors are great to write if you have any. Whereas the markets for maybe tree trimming or roofers, the rates are going to be higher, and your markets may be a bit more limited. You should be going after business exposures that are trending as competitive classes. I do see a question. What is the best way to market workers' compensation insurance? Exactly what I said. You're going to go over you're going to be marketing based off of the classes that are doing well. So knowing it all kind of goes hand in hand. Knowing your markets well gives you the knowledge to know what to market, what classes of business. Our harder to place business trends, I do want to take some time to go over because I see these submissions come in a lot. And as an underwriter, the worst thing you can do is chase business around. You want to strive to write clean policies that you have competitive markets for. The list of these types of business structures are harder to place with some of our markets. So when receiving a 1099 exposure, there's two things to look out for. One, you need to know how great the exposure is, as each carrier has their own guideline for what is acceptable. And two, if there are only 1099 workers and no W-2 employees, it's safe to assume that many markets are going to decline the risk. Owner-only policies are another exposure that most markets will not write. I see these come in really often, and I do know they are required by the state at some times, but unfortunately the markets are pretty tight with this one currently. And then for a business that uses subcontractors, these are going to be your HOAs, property management, contracting exposure. It's mandatory to obtain a percentage of the subcontractor exposure, as they can only write up to a certain amount, which is typically no more than 25%. And then experience mods are actually going to be the more lenient of this list. Our carriers can quote up to 120%. And then if carriers do see a decline in claims or businesses have put into place safety meetings or more supervision, they are willing to write the risk. The main point of this is to deter from chasing down or spending ample time on submissions that are likely to decline. You should know what good business is and what's not, what risks can I walk away from, and which are worth writing. By staying on top of this and understanding declining business trends in workers' comp, it'll give you a competitive edge amongst other agents.
There is a question. I think there may be two now.
Yeah, let me take a look. Okay, loggers and timber operators, do you have a market? We do have one carrier who is currently able to quote this. It is in consideration with the coverage history they've had and their loss history, but we do have one currently who will take a look at this type of exposure. Do you provide XMOD reports? These can be obtained through the WCIRB, so if it's an insured of ours, we are able to pull it. Otherwise, we would need to request that from the Bureau to be released. And then the third question, in reality, what % of policies written have misclassified employees? I have been writing work comp since 2009 and do this for all prospects and probably only find 1% or less are misclassified. I don't have a specific percentage, but it's always best when reviewing the insured's current policy to confirm that the business is classified correctly. That way, you're getting an idea of exactly what the business operations are, and you are ensuring that the policy is rated correctly. How do I get their loss? We see there is a few more questions that have come in. How do I get their loss runs from their current carrier? It should be either available through your agent portal with the carrier. Otherwise, you would have to request that from the carrier direct. If you are not the agent of the business and you need loss runs, you should be asking the insured to request them from their current agent or the carrier. And then another question I see in the beginning of quoting process, should we always request insured to obtain loss runs? Yes, this is something you should be requesting along with the Accord 130. Also, is an NCCI mod worksheet always required to quote? Would that negate need for loss runs? The mod worksheet isn't always required. It is helpful for those out-of-state risks because it's harder to obtain the experience mod, but that wouldn't negate the need for loss runs. Loss runs would still be required. RX mod thresholds, like I mentioned, we can see our carriers quoting up to 120%. I do have some risks that have experience mod in the 140, 150 range. Those aren't always going to be the easiest to quote with the carriers and obtain a policy. However, if you are showing that the insured has taken steps to provide safety meetings and personal protective gear, things of that sort, then if basically you're pleading your case to the carrier, they would be more willing to potentially write that risk. I want to go back to the slide. Write good business that stays on the books is the best way to be a competitive broker in the workers' comp arena. So how you do that is by selecting stable payroll-driven classes of business. Some of those are going to include retail stores, automotive exposures, or restaurants. As I mentioned previously, you don't just win on pricing, so coming to the table with additional items like carrier services, confirmation of the business structure is going to help you win the business. Once you've bound a policy, it's important to maintain a meaningful business with the insured. That way, they aren't seeing what other brokers are out there. Once you've bound the policy, it's not over, and you need to continue the conversation with them throughout the policy term. And lastly, binding larger policies may be intimidating at first, but the more you write this size premium, the better you become at managing them and going after them. And these are going to add fast production volume to your book of business.
I think there's one more question, Barbie.
Okay. What are your thoughts on broker fees and any limits to charge? Anae, do you want to potentially answer that one, the broker fees that we put on, that are placed onto quotes at times?
We have certain carriers that can, where broker fees can be charged. However, we've found that it's basically logistically difficult because it has to be collected up front and it has to be collected separate because workers' comp policies with the carriers that we write with are all on a direct bill basis. And so it's really the carrier and the insured billing process. And so collecting that broker fee becomes the issue. But it's not impossible. And so you could contact Darby if you have any questions about that.
So we're going to move into our first case study and what items of value are going to be of value to you when analyzing a risk and quoting it with the carriers. And how does this help you give you a competitive advantage over other brokers wanting the business? So these bulleted items are going to give me a general idea of the business structure. It's an automotive with 2 locations in California and performs repairs on vehicles. It's an LLC, so I would need a list of the managing members equaling 100% ownership. Around 12 employees with $600,000 in payroll. Because there's so many of types of automotive classes, from repair facilities to parts rebuilding and manufacturing, to confirm the classification, I would request their current policy, a business website, and supplemental questions to be answered. So you need to understand the operations in order to know what additional information to be looking for and how to properly classify the business. Understanding the risk like you are the business owner gives you a competitive edge over another broker. So, getting to a place where you can anticipate the questions and information required by the carrier is going to be the difference between you and someone else trying to obtain the policy. Some questions to anticipate could be what type of vehicle maintenance what type of vehicle is maintenance being performed on? Are MVR checks done? Is there a towing exposure? Do they perform any roadside assistance? Things like this. When the payroll and premium are higher, you can expect these questions to be asked by the carrier. For this size of business, you'll also want to take additional time to review the experience mod and loss history. In this case, they are rated at 92%. So they have had a couple claims that are closed, but one still open. This results in an 8% credit on their policy. An experience mod is a rolling figure, so the longer the claim is open, the mod may continue to increase over the next few years. Going in depth a little bit more on the overall summary risk, as I mentioned previously, the experience mod, you want to make sure that the insured's aware of the impact the claims being open has on their policy, because if you don't get a handle on it sooner than later, the mod can get out of control, and at that point, it's really hard to get it down. That's why it is important for the insured to utilize loss control carrier services, and that could be your competitive edge to mention when presenting the quote to the insured. Supporting documentation may be requested outside of the standard application and loss runs, such as an experience mod worksheet or a supplemental application. The insured's been with 2 carriers in the past, so I'd want to know if this was carrier or insured initiated. If it was insured initiated, it's important to remember when the renewal is coming up to continue that conversation with the insured throughout the policy term, because if they have a history of potentially quoting or shopping their policy, you want to have a strong relationship with them so you can continue to keep the policy for the renewal. So result from submission to quote was 2 days, and then the policy was bound on the 3rd. The next case study we're going to analyze is a contracting exposure. This is obviously a larger size premium and higher business exposure, so we'll go over some strategies you can utilize to obtain the business. I look at contracting exposures much differently than any other risk I come across, because there's so many determining factors on whether the carrier will write the risk or not. So the first thing I'd want to determine if it was an artisan or general contractor. That way I can get an idea of how many markets I'm able to quote the business with. Based off of the name of the business, it is an artisan, which we would have a market for. Some other artisan contractors are electricians, plumbers, framers, painters, landscapers. All of those fall within that. So CID actually specializes in artisan contractors, as our markets are expansive and very competitive with these types of businesses. Now, on the flip side, we do have general contractors. I just want to briefly mention those might be a little bit harder to place with carriers, because they have a higher tendency for more claims to occur. They may have a subcontractor exposure, often exceeding carrier guidelines. So just keep that in mind when you are quoting. So now that we've determined the business operations, just like in our previous case study, you want to anticipate the questions being asked when quoting. So a few things I'm looking at on a contracting application is what's the subcontracting exposure, and I will always require an insured to complete a supplemental, as it helps understand the structure of the business, if there needs to be a waiver of subrogation on the quote, if there's a height exposure, or if they're working underground. The next thing I would be looking for is if the insured is filed with the Contractor State License Board. For contracting risks in California, the law requires that people who act as contractors on behalf of property owners are licensed. So once I get those things checked off, they have a physical location in California. I'm looking at how many employees they have and their payroll figures to get an idea of where the premium range is going to fall within. If you'll notice on the payroll, there's 2 class codes. So for contracting risks, we see this a lot. They're typically broken up by hourly wage. So make sure that's listed out on the Accord application you receive, because they will be classified differently. And then the next thing is I would review is the claims history and trade experience. This can be a determining factor when asking for premium savings to be applied to the quote. Our case study has 5 years in business with 7 claims and 2 still open. Based on that information, the mod is assigned at 112%. For a contracting exposure that's been in business for 5 years, 112% experience mod is manageable, but it is important to turn things around before it gets too high, and then will take years to get back under 100%. Once you lose sight of it, it can really escalate. So as long as the claims are open, more costs can incur and will inevitably increase the mod. So you try to get those closed as quickly as possible. See. A competitive edge when presenting the quote is the loss control carrier services. So I'd be looking for information as to whether the insured employees are still working for the business, any safety, training, or measurements since the claims have occurred. So you should know the business. Oh, yeah, okay. Are there any issues with quoting midterm, or do they need to be quoted upon a renewal date? There's no issue with midterm moves. We do get submissions often. If it's close enough, though, to the renewal date, let's say I get a submission today and there's an effective date of April, most carriers are going to want that policy term to be seen through with the current carrier before moving. And then we would just quote at renewal. Other than that, though, let's say the effective date is maybe 6 or 7 months away, we can quote with another carrier and move the business. Okay, so for the carrier on the contracting exposure case study, they have been with 3 carriers in the past, and they've had a lapse in coverage for less than 30 days. So again, you want to know if the moving of carriers was initiated by the insured or the market. And then with large contracting businesses, after you bind the policy, they're often subject to an inspection done by someone from the carrier. I do want to mention this because a lot of brokers will bind the policy for the insured, but then the insured fails to complete their inspection, and it can result in a canceled policy. It's really easy for the insured to comply. It just needs to be done once the policy is bound. The lapse in coverage isn't unusual these days as everything's slowly getting back to normal. We're finding in the last 6 months or so that a lot of contracting businesses are just getting back on their feet and hiring employees again. So carriers are aware of the current industry, and while in the past they may have declined a contracting risk with a lapse in coverage, they're more likely to quote the business and can still present a competitive quote. For the underwriting information, outside of the standard application and the physical loss runs, all contracting risks are going to require a supplemental to be completed as it obtains the additional questions that the carrier and agent need to know in order to fully understand the business operations. After all of the information we went through, I would feel confident going to the markets as I can answer questions about the business operations as if I'm the owner myself. Again, that makes all the difference when analyzing and submitting the risk to carriers. So I would be able to bind this within 6 days. And lastly, once you bind the new business, you don't want to lose it at renewal. Binding a risk doesn't ensure you're going to keep it on the books. Each renewal you work should be treated as new business as there's more on the line. You should still be looking to save the insured in more ways than just premium. At each policy expiration, a mandatory final audit is to be completed. Assist your insured with this. I see so many problems with insureds not submitting the requested information or complying at all. For subcontracting risks, the the insured should be submitting certificates of insurance that show workers' comp coverage within the policy dates. Otherwise, the subcontractor's payroll will be included in the audit. You should be ensuring that classifications are up to date. You're receiving accurate payroll and location information. You're reviewing their loss history throughout the policy term to see if they're anticipating potentially a premium increase or decrease depending on any claims occurring. So you want to take the time to review the renewal as it maintains the relationship with the insured. A lot of times brokers may bind a big account and then it's not touched again. That gives the insured the opportunity to see what else is out there, and that's how you're going to lose the policy at renewal. Maintaining a relationship with the insured, and more importantly, the person who is the decision maker on the insurance, is imperative. If you implement these strategies, you will keep business on the books.
Darby, I think we have one last question.
Okay. Let's see.
It's an XMOD question that, for whatever reason, it seems to be confusing. So they're asking you to speak to it. Who sets the XMOD in Oregon? How is it calculated? That's going to be a little long-winded, but maybe you could explain how the XMOD affects the premium.
Yeah, so for the calculation, it's calculated by the Bureau by dividing the actual losses by the expected losses based on the exposure you're in. So if it's retail, contracting, janitorial, and then if you've had fewer losses than average, your XMOD will be smaller, lowering your premium. So 100% is the base of an XMOD. There's no credit or debit. If you're under 100%, you're getting a credit on your policy. And if you're over 100%, you are getting a debit on your policy. And the Bureau is the one who determines that.
Great information, Darby. Thank you. What a great job. And I want to thank everyone for joining us. Make sure you visit our website. We have lots of tools and a lot of information on upcoming webinars. So, such as we have lots of recorded webinars on coverage and classes of business. And then you can see what upcoming webinars for 2023 that we are going to be putting on. And of course, there's Darby's information. Please feel free to reach out to her. She's, as you can see and hear, that she is very experienced and very efficient at quoting for you. So go ahead and submit your workers' comp applications today and reach out to Darby if you have any questions. Thank you all for joining us.